Thank you. Good to see you all. You might be wondering, why the heck are we all invested in the junior gold space right now? Are you asking yourself that question as we look at where valuations are at today? Dismal performance over the last 12 months, the last 12 years in the gold space. So you might ask, well, why do we have some confidence in what we're doing here? And when's that going to change? When's the performance going to come back to the sector? My faith starts with gold. You know, man's longest term store of value, over 5,000 years history as a store of value for mankind. And despite the rising real rate environment we're in, gold has really performed. Gold is up near record levels. It's up today about $34 an ounce. It's up over the last year about 10%. Over the last 5 years, it's up about 50%. And over the last 20 years, it's up 400%. So gold's a good place to be. And in fact, gold equities are actually in really good shape, producing some 30% margins over the price of gold, 40% over ASIC costs over the last decade. That's financial discipline, producing free cash flow yields of 2 to 10%. And if you look at the dividends, 2 to 4% payout ratios for most of the senior and intermediate gold companies. So the senior gold companies have performed. I think what we're facing is that investors have shunned small cap names. They've chased after the big caps. They've pursued market momentum. And we all know how that ends. At some point, the rubber will hit the pavement. And I believe that our sector is a really tightly wound up spring for performance. There's been underinvestment both from the seniors in terms of sustaining capital and from investors in terms of risk capital in the junior space. And that will only exacerbate the problem we face in the industry, which is that we're producing gold at 120 million ounces a year, and we're only finding gold at a rate of about 10 to 20 million ounces of gold a year, let alone the permitting that's required, the construction, and the operations to deliver that gold into the market. So that's the setup for what I want to talk about, Revival Gold. High-quality gold project in an excellent location with significant upside, trading at great value. I would point to our cautionary note and quickly summarize the project on this slide here. We are advancing the Bear Track Arnett Gold Project located in the western U.S. We've taken a phased approach to this project with our first phase heap leach, and now the subject of a PFS, and then an underground opportunity which builds scale on that first phase and beyond. We've got a super team assembled for this project working on a brownfields site with all that infrastructure pictured on the right. Idaho, where we're located, has really come onto the map of late. Barrick's just put $30 million into one of our peers in the state. We've got about 30 million ounces of undeveloped gold in the state, which is pretty special relative to our neighbors in Nevada who are scratching around looking for new gold projects for that long, track record of gold production in the state next to us. So this is the new frontier. Our project is some 14,000 acres in size. The key attributes here, first of all, we have road access. Second of all, we have a power line into site. At the apex of the project, we have an existing ADR gold processing facility, which we can redeploy to produce gold from a heap leach phase of the project. And in the longer term, and as our predecessor company was just describing, in the United States, really unthought of, these large shear zones which host a hell of a lot of gold. In our case, the Panther Creek Shear Zone extends for some 10 kilometers on our property. We've drilled off about 5.5 kilometers of that, and we've hit with every drill hole into the shear zone. 5.5 kilometers of mineralized trend, pictured here. You can see the first phase project in blue shading here in 3 open pits. And then below that, we get into the mill aspect of the project. And to the left of your page, in orange shading, is the start of the underground. That phase of the project, known as JOS, is about 1 kilometer of strike with just 20 drill holes into it. 20 drill holes with an average grade of just under 3 grams over a drilled width of 45 meters, within which we have a high-grade core grading just under 8 grams over 5 to 6 meters of drilled width. The resource, 2.4 million ounces of measured and indicated, 2.2 million ounces of inferred, of which about 1.1 million ounces of our inventory is heap leachable. And then beyond that, the underground resource, which is now sitting at about 900,000 ounces of gold, grading 4 grams per ton, and open in all directions. I talked about a phased approach to development. This is borrowing from our friends in Australia who decided long ago that it just doesn't make sense to build $1 billion project when you can phase a project, lower risk, and get faster progress to free cash flow. And so that's what we're doing. Our first phase project is relatively modest, 65,000 ounces a year from a heap leach operation that takes advantage of that existing infrastructure on site at Bear Track Arnett. The next phase will go underground. In fact, we're even looking at the possibility of producing simply a concentrate from that operation to again lower capital and get ourselves up to bigger scale, some 200,000 ounces from doré gold production and gold in concentrate. Beyond that, a larger mill complex could take us up to some 250, 300,000 ounces a year from this project. That's the vision. The specifics on phase 1 are pictured here. A $109 million capital will take us into free cash flow in that first phase. It's a relatively modest CapEx, and it's also largely made up of equipment as opposed to earth moving. The roads are in, the power line's in, the heap leach pads are largely constructed already for reuse, and so that lowers risk on the project. 24% after-tax return at $1,800 gold, and of course, much higher at present gold prices today. We continue to explore on this project some of the infrastructure shown here, and the cash flow profile, which is currently 8 years mine life, that approximately 1 million ounces of resource, but we have another piece of inferred resource, and we have exploration targets beyond that. We think this is going to be a 10 or 12 year mine life from the first phase, just from that heap leach aspect of the project. Talk a little bit about exploration upside. This gives a view of the landscape. What's important about this is that we don't have any neighbors. We're an hour from a town of 3,000 people, which means no requirement for a camp and no requirement to have people come in from far, far away to work on our project. And yet we're far enough away that we don't have any neighbors. Here's some of the exploration from 2023. So this is a cross-section through a long section through our pit at Haiti. And you can see an intercept from 2023 grading 4 grams per ton gold over 20 meters in oxide mineralization. So this is exactly the kind of thing that has high value and immediate impact on that first phase heap leach plan. Some of the material here, very high quality leachable material. Some of the exploration opportunities beyond Haiti. Here in the exploration from 2023, we went to some target areas that we'd never drilled before. And some of them had never been ever been drilled before, and we hit gold mineralization in all 4 of the targets we pursued last year. And just to give you a sense of scale here, we're talking about over 1 kilometer of strike between the targets on the right side of the page to the left side of the page. So now I'm going to talk about the underground potential at Bear Track Arnett. This is the next phase of where we go for growth. And where is the best place to look for gold? In the shadow of an existing gold mine. And so you can see coming off the south pits from that were mined in the late 90s, early 2000s, heading north We go by the heap leach pad, right by the plant, and below that is our underground target, Joss. Some of the geology pictured here, which I won't spend a lot of time on, but I do want to talk about Joss. The middle of this page outlines about 1 kilometer of strike in the shear zone. And remember, this is a 5.5 kilometer long shear zone. We're talking about just 1 kilometer of that shear zone, 20 drill holes. There's 2 cross sections on either side of this page, which if you care to look at some of the numbers on our website, you'll see are absolutely fantastic underground grades. We're talking 10, 12 meters of 6, 8, 12 grams per ton gold. And in a vertical structure with continuity along strike. Here's some of that core. We're talking about grades that even Mr. McEwen would love. We're talking 19 grams over 5 meters, 17 grams over 4.5 meters. These are believable drill holes spaced some 200 meters apart within that kilometer of strike. And that's not the end of the story. I started out by saying we have a 10-kilometer shear zone. We've only explored about 5.5 kilometers of that. So the potential beyond is outstanding. It'll take time to get to it, and it will take drill money, but it's certainly of interest to some of our bigger peers, some of the biggest gold companies in the world looking at Bear Track Garnet. I'll talk a little bit about some of the non-technical aspects of this project, which make it so unique. I mentioned that we're in the western U.S. state of Idaho, but we're also in a community that understands the benefits of responsible exploration and mining. We've got the permitted Idaho Cobalt Project next door to us. We're in the same jurisdiction that the Thompson Creek Moly Mine is located. This is a community that understands the benefits of mining. And it's a community of 3,000 people. And the first question I always get when we're presenting to during our annual community open houses is, how's the exploration going? The next question is, when is the mine going to restart? And the third question is, where do I sign up for a job? So this is the kind of community that we're in. And we spend a lot of time working with the community to make sure that we keep it that way. Our market cap today is about $35 million. And, there's not much to say about that, except at $5 an ounce in the ground, we're trading at exceptional value. The research analysts that cover us understand that, see the value in the team, in the project, in our investor base, and the strong management ownership, I think, underscores the point of value in the stock. And that's the summary here. We've got a strong foundation. We're in a very good location with a world-class asset, one of the largest new discoveries in the last decade in the United States. We have a low-risk phased development approach, and it's a catalytic opportunity, I think, in this asset with our exploration potential and our development potential, and we're working on surfacing the value for our shareholders today. Thank you very much. If you have questions, I'm happy to take them offline or as time permits. Thank you. Thank you, Red Cloud.